Energy tech doesn't move forward alone, and neither should you. Energy Tech Cypher brings together the founders, investors, operators, and corporates shaping what's next. From innovation trends to data-driven insights, this is where the ecosystem connects, collaborates, and moves. Find your place in the ecosystem at energytechcypher.com. That's Cypher as in CYPHER, where we bring the community together online and in person. Welcome back to the show, everybody. I'm really excited today to have with me a special guest, Arindam Bhattacharya, who just started his investment firm called Tailwind Futures, and it's a fund that has a very unique thesis. So I'm really excited to get into that today. Welcome to the show.
Thank you very much, Nada. Thank you, Jason. It's great to be here.
Yeah. So before we, get into, maybe that's a great place to start is tell us about the story of Tailwind Futures. What is your thesis and how did you come about deciding on starting this fund?
Okay. Yeah. So, so Tailwind Futures, first of all, quick one-liner in terms of what we do. We are a venture capital firm in early stage. We're a strategic fund and we're an ecosystem developer. And we focus on the area of climate adaptation and resilience, which is a unique emerging thesis. And specifically, we focus on corporate resilience or enterprise level resilience technologies and innovation where we invest. And we invest across 3 different verticals. So we look at built environment and infrastructure. We look at supply chain resilience and we'll look at workforce resilience. So these are the 3 verticals we invest across. And across these, we invest in software, hardware, material science. We're pretty agnostic to the specific type of technology. Insurance is an important area, obviously. So we look at insurtech solutions as well within that. So anything that essentially creates resilience within the corporate environment, within business sectors, within industries, in the face of physical costs and physical impacts of climate change that are going on. Okay. A bit of my journey, how I got to this. I spent 30 plus years at Schlumberger at SLB. Started as a field engineer in 1995, lived and worked across 10 different countries, which is kind of the par for the course for the global oil field, as you know. And across this time, I spent time mostly on the business leadership side, running different regional and global businesses for SLB. And then the last 6 years, I had the opportunity to work in the corporate venture capital side, running the corporate venture capital team, really incubating and investing in energy transition technologies. Okay, so building up what was Schlumberger's new energy business, right? So a lot of work around decarbonization, industrial decarbonization, critical minerals, clean power, looking at things like carbon capture, hydrogen, critical minerals, geothermal, long duration energy storage, et cetera, et cetera. So during this journey, as I was kind of getting to my 30-year milestone, I'd spent a lot of time with founders, investors, spent a lot of time on the venture capital side. And I really wanted to step out and do something different. And for the last 2 years before I left, I was thinking about what would be the thesis on which to focus. So I spent a good amount of time researching that. And what I was doing is instead of kind of rushing down into areas where everybody else was rushing down, I was trying to look a little bit ahead of the curve, looking downstream in terms of constraints and looking at capital and constraints. Okay. So generally capital tends to follow in our industry. There's a little bit of confirmation bias. So a lot of capital gets concentrated on a few themes. And I didn't necessarily want it to get kind of caught up in that. Not that there's anything wrong with that. We need capital for solving lots of problems. I wanted to look ahead of that and try to understand what is it that we are not seeing? Where is it that capital is not flowing enough? And looked at a few different challenges, and adaptation resilience really stood up. Okay. Why did that stand out? First of all, we've spent a lot of time on decarbonization. Like there are people who have spent their entire careers on decarbonization technologies. And it's been very clear over the last few years that this is a very, very tough problem to solve. It is going to take time. It is going to take resources. And there are some very smart people working on this. Okay. And I'm very happy to see, a lot of the progress that has happened over the last few years in some of these very key technologies. And we're seeing some of these getting to commercial stage. But at the same time, when we kind of look at the world around us, okay, there is a cost, okay, in terms of that is adding up, right, from impacts. So if you look at extreme weather impacts, if you look at natural disasters, and then if you just extend out to more systemic changes like extreme heat, sea level change, etc., then there is a near-term impact that we're already living through. So if you go back to any of the reinsurers like a Munich Re or a Aon, I mean, they publish these numbers all the time. So these are available. The last 8 to 9 years of average physical losses globally is of the order of $300 billion.
Mm-hmm.
And the insurance payout on this number is about $100 billion a year. So 2/3 of what is being lost to natural disasters and extreme weather is actually uninsured. So this is a pretty big uninsured gap, okay, or insurance gap, if you like. So that is a big number that kind of stands out. When you now project this number out, and people have been making projections, there are projections that this will grow 3 times. So we're going to be hitting close to $1 billion of physical losses maybe in the next 10, 15 years. And the insurance gap, if it stays around the 60%, so that's a very big number. Okay, so that's, I think, one big number to kind of take away.
And just to take away, so it's not necessarily that insurance is covering more or less, it's just it's uninsurable risk right now. Is that really what it is?
Correct. I mean, if you kind of look at it, the risks are changing, the hazards are changing, and the risk modeling is not covering some of these. So insurance in specific cases are moving away from markets or are just not covering certain things.
As they should, because they don't have a way to cover it.
As they should, right? As the business doesn't exist. So, or they need to come up with different tools that allow them to, assess the risk better and cover that, right? So this affects individuals, this affects governments, public funding, et cetera, et cetera. Now, this insurance gap, who does it impact? It impacts all of these players. Now, where is the capital coming from into adaptation today? The capital to kind of harden your infrastructure or diversify your supply chain today, if we go back to about 2023 numbers, so Tailwind Futures did a research work around that, about $1.4 trillion was being spent globally on adaptation and resilience. About half of that was coming from public funding from governments, okay? And so $740 billion roughly a year, which is equivalent to what was being spent in renewable energy infrastructure around the world, which is more than what was being spent in upstream oil and gas, which is of the order of $550 to $600 billion a year, right? If you now go back and look at how much corporations were spending within that, it was of the order of 1/10 of that, probably about $60 billion a year, right? So very little coming from actual private funding or corporate funding. So there's a big investment gap that we identified there. So that was one of the reasons we wanted to look at Tailwind Futures to be catalytic towards private capital mobilization in that space. The second big reason that kind of I looked at this space was because there's, as I talked about, a bit of concentration of capital towards some of the technological revolutions that are taking place in our space. AI, data centers, so much happening in that, and there's rightfully so such a big infrastructure boom taking place in that space. When you kind of look downstream of that, once again, there's physical constraints to how fast we can build some of this infrastructure. And that physical constraint, when you start looking into reality, a lot of people are talking about power and grid, okay? And that's obviously a big constraint that a lot of people are working on trying to solve that. But then there's also water, and you don't hear as much about water infrastructure or water stress happening. There's also around critical minerals. And while there is a lot of work going on in critical minerals, there is still a gap when it comes to supply demand on certain critical minerals as we kind of look forward or in the supply chains of these. So that was another big area, okay? The cost, the gaps or constraints. And I think the third area was how we look at business resilience. The business resilience, so far people have been looking at it as only, I have an extreme weather effect, I have assets that are exposed, and therefore I only need to look at asset integrity. But at the same time, when you start thinking about systemic changes, then you also have to think about, if you're an infrastructure builder, the operating environment within which that asset will operate for the next 30 years, okay? So you have to look at not only the physical impact on the asset, but the operating performance of the asset over the time for which it's being built, the contractual exposures, market risk in terms of pricing, And also, how well are you set up to address some of the gaps we talk about, like insurance, right? So we need to look at business resilience and business risk in a much more holistic way. So that was the third area. So these are the three things that kind of really spoke to me about the space. And at the same time, I felt we are at the cusp of so much of groundbreaking technology, whether it's AI, material science, etc., that we can innovate our way out of this, or at least in a large part, we can find solutions to this. And that's what really took me into this space to, first of all, I came across great partners. So my partner, Emily Mazzacurati, who founded Tailwind Futures 3 years ago, she comes from a climate finance background, ex-entrepreneur. And, we started working together 18 months ago on setting up the strategy and the thesis of this. Down the road, we were joined by Osama Idris, a corporate venture capitalist.
Okay, I remember him. He's at Chevron, right?
He used to be at Chevron, Siemens, and then EDF.
Okay.
So, Osama came and joined us, and he's now working with us as a partner as well. So between the three of us, we have a very diverse team, very, diverse in terms of the experiences that we bring to the table and our thought processes. And we set out to build up the fund, raise capital, invest in early stage technologies to make adaptation and resilience a space.
No, I find it super fascinating when you first spoke about it with me at EarthX, because I was like, this is the type of fund I don't find in Texas, because we focus a lot more on growth, on, even though we're not a tech city, but investors are more likely to fund AI or SaaS, because that's just what you fund. And resilience and adaptation, the way you're talking about, is more about managing the cost in some way, and it's less about like a growth story that you usually sell in VC. So how did you go about, getting investors on board when it's a different mindset?
So great point. Thank you for bringing it up, because I'm going to counter that. Okay. So yes, the first impression you have when you start talking about physical cost and loss prevention, the first thing that comes to your mind is resilience is all about loss prevention. Okay, how can I fix my cost? Because you're talking to me about insurance. You're talking to me about hardening my assets. Okay, so you can play defense or you can play offense. Okay, you get to choose. So you actually have three options. You can do nothing. Okay, and say every one of these hits is just a one-time hit, and I'm going to take it on my face as it comes.
You can put in soccer metaphors as much as possible today.
Okay.
No, I'm just kidding.
In soccer, we don't say play defense or play offense, because you play total football, so you're playing defense and offense at the same time, right? But I was talking more in terms of American football, playing defense and offense. But there's the other angle where you don't do anything, right? You can be a corporate player who says, I'm going to take this as it comes, as the hit comes, and we'll deal with that. Or you can play defense and say, okay, this is all about, loss prevention, okay, which is essentially finding those areas where you have vulnerabilities and making sure that you don't have losses. That's a good place to approach it. But the other side of it is you have tremendous opportunity, okay, on the back of this to create a growth story. Where does that come from? Let's say you're an infrastructure builder and you are building your infrastructure based on forward-looking models in terms of climate. You're building your 30-year infrastructure or 50-year infrastructure on the basis of using technologies like digital twin, so where you can actually quantify the impact of climate on specific assets, specific locations in terms of how those will behave. Okay, you have an edge on top of, ahead of others who are building differently. If you are looking at adopting, you're a data center builder, okay, and you do advanced design based on some of the technologies that are coming out where you're really able to have very high degree of energy efficiency or very high degree of, let's say, better cooling, for example, performance or power performance, or more power resilience. These are all resilience technologies, okay, that help you build a better solution and lead to a better outcome, okay? As we go forward and as the physical constraints get more and more apparent, okay, then the demand for these kind of solutions will grow, okay? Similarly, if you're talking about water stress, there's new technologies coming out that help you regenerate water or reproduce water at lower energy intensities, okay, which is absolutely critical. there are new products coming out in the insurance market that help you cover your risk. Okay, address parametric models that trigger off of specific events, and it allows, if you're a small business or a medium-sized business, allows you to get faster access to cash flow, right? So all of these things are growth stories because the people offering these technologies and solutions are going to see growth as the climate regime changes, as the operating environment changes. And that would be playing offense in the sense saying, hey, I'm not just looking at loss prevention. The person who's adopting these technologies is going to have a competitive advantage in the market. Yeah. The person who's selling this technology is going to see growth, okay? And that's where we're trying to get to.
Yeah, I think if you also just think about, and I love this thesis, because if you think about like the last 18 months of the current political environment, like the boogeyman in the room has been FEMA, right? And there was even talk about some point about disbanding. And when you say who's investing in resilience and hardening kind of the U.S., like you think it's either states or it's like a national organization like FEMA who's going to come in and kind of help. And there's a clear pullback in that in the U.S. today. And so if 90% of funds being spent were historically governments and the U.S. is like 25% of the world economy, you look at this and you go, oh, government spending is going to decrease. It's no longer in favor from the current political environment. You know, the smart companies will look at this and say, oh, this is the opportunity to get ahead. And everyone who's not paying attention are going to be the ones left behind. Correct. Because that safety net is, if no one's been noticing, it's gone, right? And so I definitely see that trend of like the funds are going to shift in terms of who the buyer is. And this is the time to come in and offer those kind of competitive products. So it's a interesting dynamic, especially to be in today, where I'm sure everyone's trying to figure it out. And that's the opportunity to make money, right?
Absolutely. So, and, talking about government spending, the 2023 number of 740 billion, right? That was a global number. I can't remember off the top of my head the US number, but I mean, as this problem progresses, okay, you can't keep having more and more government spending in this, right? I mean, there is going to be a limit, okay? And that limit will be different in different countries, right? But there are countries that are at the leading edge of this impact. Like, we're talking about the US here, but if you go out to Far East Asia, Sub-Saharan Africa, South Asia, India, where I'm originally from, extreme heat, sea level rise, these are real things. Resilience, I do not have to explain to a single potential investor from any of these regions what resilience means. I do not have to explain what adaptation means, okay? They know it. And, they're keen to get ahead of the curve on that. So government spending in all of these countries is also limited, okay? Government spending here in the US is limited, as we have seen, and it has drawn back, okay? So capital has to step in there. And what we're trying to show the case is that this is not just playing defense. Capital can step in here and make a good return on that, create high growth businesses and create opportunities. And we have made 6 investments at the moment within our fund. So we did a first close in January and we've made 6 investments. And I'm super excited about all 6 of them because I think each one of them are unique in their way, prove our thesis. And when I talk to you about these companies, I mean, you tell me that one of them is not going to grow.
I would love to actually dive into some of them and, to get into some concrete examples of what this can look like. So it'd be great if you could share.
Sure.
Like Dexmat obviously is a long time Houston champion. And so I'd love to hear about like your thoughts around them since I think a lot of our audience would be aware of them.
Yeah, absolutely. I would love to talk about Dexmat. It's a friendly neighbor company for everyone. So let me just take one step back and explain a little bit the framework of how we invest. So as I mentioned, we invest across built environment and physical infrastructure, supply chain, and workforce resilience. And within these 3 categories, we look at 3 types of solutions. So what are we essentially looking for? We're looking for solutions that help us predict or compute better. Okay, so we're talking about AI, high performance compute, better sensors, edge IoT devices, et cetera, in one category. Why? Because this will help us get a better handle on future risk. I'm not talking about now modeling solutions based on past historical data. We need to look forward. So how do we make it more, whatever predictions we're making, forecasting we're doing, how do we make it more hyper-local? How do we make it asset-specific? So those predictive models. The second category of solutions we look at are really those that are physically mitigating risk. So hardware, deep tech solutions. So we're talking about advanced materials like DexMat, talking about solutions around water harvesting, solutions around extreme heat, radiative passive cooling, these kind of solutions. So this is where you're physically doing something to actually mitigate, And the third type of solutions, now with the benefit of having better prediction and better mitigation, the third type of solution is we should be able to build better insurance products for the market that address gaps in the market. And this is where risk transfer comes in. So risk prediction, risk mitigation, risk transfer across these three areas of infrastructure, supply chain, and workforce. So now, within that context, let's talk about DexMat, our Houston area company. So DexMat, we invested in DexMat because supply chain resilience is part of our thesis. Within supply chain, we look at critical materials and critical minerals. Now, copper has a huge supply stress as we kind of look into the future. Huge demand growing even before data centers become a thing. Copper was under stress, and we believe so. DexMat produces from carbon nanotubes produces this material called galvan. And galvan has very high conductivity, high strength, lightweight, flexibility, magic material, right? And what they have done is amazing. They have brought down the cost of producing galvan. They've scaled up production. So today, DexMat's beachhead market, first entry market, is automotive, aerospace, and data centers where they can replace copper in internal signal wires. This is not just a one-to-one replacement of copper. This is also a huge performance enhancement over copper. In an environment where heat is a concern, the property of the material, actually conductivity improves with heat, So the property of the material is actually better for the specific designs that we're talking about, right? So DexMat, we believe that as it scales up, we'll be able to step into other use cases as well. And not just for copper, because it has also structural strength. So therefore, maybe in some cases, steel or aluminum. So as DexMat is going to be hitting new cost benchmarks for galvan, it's going to be opening up newer and newer markets, And how does that help us in copper supply chain? Obviously, replacement material. And you're not talking about replacing the whole of the copper supply chain, but this is a huge TAM. So if you address a certain use cases, we're still talking about very massive markets. But at the same time, what it does is it takes away the upstream risk of finding new resources, extracting resources. If it takes 15 years and several tens of billions of dollars to bring a new copper mine online, those 15 years and several tens of billions can do a lot to scale up a production of a DexMat line, for example. And the midstream risk of having to ship that all the way to China to process and then bring back, you also short circuit that. Now you can produce that material closer to your end point of use. So you're addressing both upstream and midstream, hence you're removing supply chain risk. So that's an example of a supplemental material that reduces supply chain risk.
I'm curious, like where do they get the, I assume it's mostly carbon is the primary material, and then there's some doping in it. But I mean, where does the carbon come from? Is it in the air, or do you pull it out of like plant fiber?
No,
where does it come from?
So from natural gas.
Okay.
If you do pyrolysis, of natural gas, that produces solid carbon, and that produces hydrogen, for example. There are a lot of companies around here who are producing hydrogen from pyrolysis. The byproduct of that is solid carbon. And depending on the process, if you get the right process, some providers can actually tune that byproduct to produce very high-grade carbon nanotubes. The market of carbon nanotubes, this is the highest valued product you can produce of solid carbon, but it's the smallest market as well. Okay. And what DexMat's solution can do, it can actually blow up the carbon nanotubes market. So that's
Is it a feedstock for carbon nanotubes, and it reduces the
natural
cost?
gas? Natural gas is the feedstock.
But the DexMat process creates the nanotubes. That's what you said earlier.
So DexMat's process follows the carbon nanotube production. So they start from high-grade carbon nanotube suppliers. They take that, they do their own proprietary process and creates galvan out of that.
Okay, got it.
Okay.
So they produce the carbon nanotubes also, or they source that?
No, they source it.
They source it.
But that's what would cause the nanotube market to explode, is if there was a downstream use case that you could put domestically anywhere, basically.
When not if DexMat is successful, then the carbon nanotube market is going to blow up. You guys should really have Brian Hassim here as well.
We haven't had him yet.
He's an amazing speaker. So DexMat is one company, for example. I'd love to talk about our latest investment we did like 3 weeks ago, Allium Engineering. Okay, so Allium is out of Boston, out of Massachusetts. 2 MIT nuclear material scientists went out to solve a really, really massive problem in infrastructure resilience today, which is steel corrosion. So if you look at
the rebar guys,
if you look at infrastructure and just drive down any of the bridges or bypasses, and you see all the corrosion within the infrastructure, that is accelerating. And it's accelerating especially fast in coastal areas with coastal infrastructure because of seawater invasion, or subsidence, or many other reasons, right? Flooding. So storm surges, as you're having in many places. Parking lots are getting corroded, and there's a huge amount of money being spent on parking lot upgrade because of corrosion within those, because of flooding. So the solutions that you have today, which some DOTs are implementing, are getting corrosion-resistant rebars. And how do you get corrosion-resistant today? The incumbent solution is you get a pure stainless steel rebar, which is very expensive, but lasts 100 years, or you get an epoxy-coated rebar, which lasts about 20 to 30 years, but is very unreliable because the epoxy can break, and then you end up having corrosion anyway. So what Stephen Gipal and Sam McAlpine, the co-founders of Allium, have done is, so they have taken their process from cladding nuclear reactors to create a laser-deposited stainless steel cladding around carbon steel rebars.
So it's just the thin outside is the expensive stuff.
The thin outside is the expensive stuff, but they do it in a way, in an automated process where it's laser-deposited, creates the right metal-to-metal bond, and in reality, they do it on the steel pellets. Then they do the process, and then they do the hot rolling process, and even it goes through the hot rolling process, and it still stays intact. Right. So that's the beauty of the process. So they've managed to actually go out there and build infrastructure. This is not a pilot or demonstrator. You actually have a bridge in California, and you have a pier in Florida, that has been built with this infrastructure, and engineering firms are now putting that in. So they just had a oversubscribed round, Series A. We participated in that. So we're super excited about that.
Congratulations.
And that is really common sense, real technology.
Yeah, and you know why it sounds common sense to me? Because, a word that I haven't heard you use, but that comes to my mind again and again, is like, this is what sustainability is about, right? Like, it's about building things for the long term.
Correct.
And often I find, especially when it comes to infrastructure here in the US, we build houses that only last 20, 30 years. Whereas you go to Europe and, your houses last hundreds of years. Like, the buildings you're living in that have been there. But you don't build houses like that here because you're going to break it down. It's made out of wood. And
I got to say, you live in Texas. You got to go to the Northeast.
Yeah, Northeast is different, obviously. Yeah, I mean, I'm talking about Texas. Absolutely.
Texas.
Obviously, Texas. Northeast is different. Like, so it's also about like it just makes common sense, because why don't you build something? And when it comes to, steel infrastructure too, why don't you build it? Because it's going to corrode at some point, but you're building it. And I think the reason why we don't do it in many places is because you're looking for short-term gains and not thinking about the long term.
Thanks for listening. If you're fundraising now or know someone who is, I want to tell you about Saffron, our investor relationship management product for energy tech founders. Think of it as a CRM built for energy fundraising. Use our recommendation engine to find the right investors faster, and then track every conversation and stay connected through your raise. There's a free tier, so you can start today at no cost. That's CEPHYRON.com. Now, thanks, and back to the show.
So I think, thinking resilience will force you to think about these kind of things. You're talking about buildings and built environments. So one of our companies, Class 3 Technologies, we invested in them in August of last year, was spun out of Arup, the engineering and design firm. And essentially, so we worked with Powerhouse Ventures in that spin out, and we participated in the round with them. So Class 3 Technology specifically looks at commercial real estate, built environment, and they have a software SaaS platform that has very strong physical engineering, structural and resiliency models. So if you're building a commercial real estate portfolio and you want to analyze specific climate risks based on the location and the type of infrastructure you're building, they have physical models that actually help model that, and they can come back and tell you what exactly the hazard is. They can go ahead and help you model mitigation for that. Okay. And this platform is now available for commercial real estate, and it's going to a growth phase on that as well, because commercial real estate is really seriously looking at climate risk in terms of their existing portfolios and new projects that they're going to do.
Yeah, and so, in commercial, they do have to think that long term, right? in a different way than residential. So.
Yeah. We got 3 other companies on the existing portfolio. Quickly going through it. So Field Factors, a company based out of Netherlands. They've done projects in Netherlands and Spain, and now coming into Mexico. So they do rainwater harvesting and processing, and along with that stormwater processing as well. And they can do large infrastructure projects. So they have their own proprietary biofilter, which runs with a digital control system to make sure that the processing is done in the right way. We have Cryogenics, which is a company out of UK. Just to show that we're not forgetting the workforce. I remember I mentioned workforce. So we have workforce that is exposed to extreme heat, and heat shocks is a growing problem, heat strokes. So Cryogenics has a device that does not require power or water. And you go into remote locations, whether it's in the middle of the Permian, you're working on a rig crew, and you're exposed to extreme heat. So if somebody has a heat stroke, you can put on the Cryogenics vest, you connect a cylinder of CO2, it creates cooling, core body cooling. And the core body cooling is at the right rate, so your body doesn't go into cold shock on the other side. So their device is going to go into FDA clearance in Q4, and it's going to be available in the US next year.
Yeah, and I was going to ask, what's unique about these guys? Because I've seen 3 or 4 people trying to do jackets, and they're all doing like glycol and freezing it at the throughout the day. But this is a remediation.
This is a remediation thing,
and you can store the cold. Yes, because it's CO2 is very small.
It's CO2 and it's portable.
Very portable.
So this is the kind of thing. Think about it as a defibrillator. In future, you should have devices like this in the truck, in the on the rig, on the construction site, on the mining site, available to help. So it's not preventative. It helps recovery. In sports, for example, right? And the 6th company in our portfolio is Hohonu. It's a University of Hawaii startup. They do flood monitoring. So they have these low-cost, small footprint flood monitoring devices connected into a data and prediction platform. And so they're installed in. They have an installed base in Florida, across the East Coast, but I'm really, really happy to say they just got qualified in the Texas DIR for early warning systems. So they're one of the qualified solutions that anybody in Texas, they already have a commercial proposal now approved and negotiated. So anybody in Texas can kind of step up and go ahead and install early warning systems and fast track the procurement process. So these are all real solutions we've invested in.
So I heard 3 things. I heard you not only invest all the way across the U.S. from Boston to Hawaii, but you also are sourcing companies out of Europe. So how does that work with, I think you're here and your partners in
California. Yeah.
Both of them. Yeah. So how do you get access all across?
Yeah. So it's our network, right? So, I mean, we are visiting Europe, once in a while, but otherwise we have our network in the sense I've worked in corporate ventures and in SLB, so I have network in Europe. My partner, Emily, she has a strong network in Europe because when she ran her company, 427, in the space of climate data analytics, she had customers across Europe as well who she maintains connection with, the European ecosystem. And the same thing with the Canadian ecosystem. And also through some of the consulting work and the research work we have done, we have also focused on Europe and Canada. So it's really maintaining the network. The deal flow comes. It's still a global world out there, right? In terms of the venture world. So, yeah.
We at Energy Tech Cypher, we work very closely with founders and help them get access to the right investors. And then we talk to a lot of investors too, and we're building this extensive database of all these emerging technologies. When we talk to investors and we try to find out what is the biggest challenge for you in terms of finding the right companies for you to invest in, how would you answer that question for you, particularly, having worked with your experience in SLB and also with what you're doing now?
Yeah, I think there are lots of great ideas out there. Okay. And when we're looking for the right company to invest in, we're looking at well beyond ideas or well beyond the science. Okay. So we're looking at, on a technology front, we're looking at something that has gone through the initial scientific risk, and you have a productization done. Okay. Somebody has thought through the right product market fit and what does that product look like. Okay. So the scientific risk is done. The team is really, really important for us. So especially the founder is really, really critical. So we spend a lot of time with the founder, making sure we understand the founder or the CEO. Sometimes it's the founder is not the CEO, in which case we look at the interaction of the team. Okay. Is the team set up to be able to scale this and convert this into a business? Okay. So that's super important to us as well. And then is the team flexible enough as the business grows to be able to bring in additional capabilities, especially when you're looking at deep tech, the capabilities you have to add in the team as you go forward is about, complex project execution or project development, those kind of capabilities. So are they flexible? Are they open to that? Track record, is another thing we look at. And then who else is investing? What is the coalition of investors, co-investors, strategic partners who are ready to kind of take this forward? Especially once again, if it's deep tech, you need to have partners who are ready to kind of go along with the ride, okay, and spend time on this. So I think we look at a multitude of these things, and I think specific to resilience tech, we're very focused on looking at, because that, and this is our focus and our fund, because we're so focused on corporate resilience, because remember where we started, we're trying to catalyze private capital, corporate capital. So we're really focused on B2B businesses or corporate businesses. And there's a lot of startups working on the B2G space. There's a lot of startups working on impact and community, which is extremely important for us. We have a whole of society model that we work on that we've developed from the point of view of impact, which is we believe by building strong, resilient corporations, we're also building strong, resilient communities, because there is a interdependence between communities and corporations where they work, right? So we choose to focus on this through corporate resilience to build resilient communities, right? So we really want to make sure that the solutions we're investing in are corporate focused, are those that the corporate partners can go and adopt and implement and scale and deploy. So those are some of the things that we're looking for. Yeah.
So if we were to kind of dig further into, there's some stuff that said that can be like quantitative, but then a lot of it is qualitative in terms of like the team, right? And the founder team dynamics and things like, are they going to be able to pivot? So how would you actually go and judge that? Because, usually, how much time do you spend actually getting to know the founders and the company and how they operate that allows you and gives you confidence that this is something that I want to invest in, or it's a team I want to invest in?
Yeah, I think typically we're investing in companies where it's possible to assess that, okay? And in cases where it's too early, we're actually spending a lot of time with a few companies in the really early stage where we're helping them through some of that. And we're spending time with them. And sometimes we're the first ones at the table working with them. And we're not just transactionally looking at them and saying, do I invest in this or not?
Yeah.
But we're trying to see the potential of this, what they're doing, and saying, hey, this can grow into something big. This is solving a big problem, okay? The juice is worth the squeeze, as they say. And we should spend some time with them and help them through this process. And then that allows us to also look at the dynamics. And so we are dedicating time in building that in the really early stage as well. Okay. There's a couple of cases where it is literally a thesis or a thought process in someone's head. And sometimes we're having weekly calls or bi-weekly calls with them and saying, how do you think about this as a product? What would be your first customer? Or how would you monetize this? So trying to help them kind of get through that. And then in that process, we are able to make some of those judgments as well.
So it's about relationship building.
It is about, absolutely.
And sometimes it can take you 2 years to decide if you want to invest in that company, but you're still
absolutely
talking to them.
This has been my pet peeve throughout the process. Like I when I was at SLB as well, I used to hate being told by a capital advisor that this company is raising a round and the round's closing in 3 weeks. It's like,
you don't
okay,
have time to decide. Yeah.
then it's going to take us 6 months and 3 weeks, you know, because I need to build a relationship. And the same thing continues into here as well. And it's even more here because we're looking at really early stage stuff, right?
Yeah. So we have a podcast that's kind of opposite of this, where we interview founders who've raised capital. And one of the themes that's come up the last probably 4 or 5 sessions is this theme of team.
Mm-hmm.
And I think one of the hardest things to get feedback on is what capital allocators like yourself think of a team. And it's always the most important thing, but probably the least amount of feedback is given to a CEO or a founder on if you think there are gaps on the team or if it's even just the wrong CEO. And I'm curious how when you're engaging or when you're vetting someone, like how would you coach a founder to say, sorry, but your team is not good, or you have the wrong people at the table, and here's what you need to do to not qualify, but clearly, the technology needs to see the light of day, but you got to get the right people around the table. Yeah. And I suspect the reason it's hard to give that feedback is because it's about people.
Yeah, I think you can't give that feedback on day one.
Yeah.
Or meeting 1 or even meeting 3. And that depends on the founder in terms of how soon you can have that open conversation with him or her, right? And you also have to do it with a lot of respect, in the sense, being a founder is tough. You have the passion, you have the drive, you need to have the guts, you have to slog it, especially these days, right? So within that context, you have to spend the time to try to understand where he or she is coming from as well. And then it's like you put all of that into a bucket and then you make your judgment call saying, is this the right time for me to go and have this conversation with the person? And it also depends on the stage. Yeah. Sometimes the conversation could be, hey, your team is great for what you're doing now. Yeah. But I think you should think about, if you go, when you meet this milestone, the challenges you're going to face is going to scale up, and this is the kind of person you're going to need for that stage, right? The earlier we can engage, we can have those conversations. And frankly speaking, coachability is also a trait, right? And if the person is not coachable, then it's a judgment call once again, right? But otherwise, again, there's no remedy for. The best remedy is being early. Yeah. Okay, and building that early relationship. Without the relationship, we can't have those conversations, right? Yeah. And the best founders I've seen have been very open to receiving that help and relying on that help. And at times, there have been cases where they'll step aside and have a professional CEO come in and run the business beyond a certain stage. And those companies tend to do well with the right team in place. Yeah. And I'm not saying it has to happen every time.
I think the struggle always is a founder, especially when you watch the founders who raise money, they always go out and they're like, we have the best team in the world for this. And they're awesome. And I love them. And you kind of have to do that as a CEO. And you also are pitching like the team you've built when you present for investment. And it's very hard to go back and say, well, actually, here are the gaps, right? Here are the gaps we have today and the gaps we have tomorrow. Yeah. And I agree, you got to get the relationship to a certain point where you feel comfortable being honest. Like, I know there's a hole in the organization here, but I totally get why you get into the situation where, one person's really pushing a vision of like why they're awesome. And it's hard to give that kind of direct feedback. And it's almost just a mismatch in how we have to communicate, like when a financing's like getting going, right? Yeah.
No, exactly. And, not in current portfolio, but in the past, we've been in situations where, also the board and the board primarily also matters. So you also have to build that relationship with the board, that it's not just, you're a minority holder. So you can't just go and kind of push your own vision on this. So you have to make sure that you're going with other shareholders and a board in some of these discussions and getting everyone else's point of view in this as well. Yeah.
Do you also find, because since you've invested in some companies outside of the US too, that there's like cultural differences on how companies pitch, in America, we're trained to be more
This is the best thing
vibrant,
since sliced bread.
exuberant, and we have to exaggerate and we have to really sell ourselves. Whereas, I find Europeans don't really do that.
I don't think Texans do that, to be honest.
I don't want to single out any specific country, but yes, there is a difference inside and outside the US. Okay. There's a very clear difference inside and outside the US. I would say kind of goes both ways in the sense, probably people could be a little bit more aggressive or ambitious in some of them, or aspirational. Aspirational is the right word. Okay. When I'm talking to a early stage company, I'm looking for two things. Okay. In certain technologies, right? I'm looking for what's the potential of this technology? Like, think of it as a platform. Where else can it apply, and where is the maximum potential on that? But I'm also looking for, in the near term, what is your narrow focus? What is the product you're going to go with now? And how are you picking that, right? And if you're only talking about the now and you're not talking about the big picture, then that's a red flag in the sense, okay, are you thinking big enough? And if you're only talking about the big picture, but you haven't really gotten to a now, then that's a huge red flag, because that means you're dispersed, right? So I think that right balance, thinking horizontal, but, executing deep, those two things are really important. And probably where you see the difference is there. Like here, we probably tend to talk a lot about the big picture, how big the market is, and, and how I'm going to get a hockey stick growth. And probably when you kind of work somewhere else, they acknowledge the market, but they're really focused on what they're looking at now and the fact that it's not going to be a hockey stick growth. So it's, how steep is the curve? That it really boils down to that. Okay.
Yeah. I think we're struggling with this a little bit. Where sometimes we're looking at our feet of what's our value proposition today? What are we doing today? Yeah. Versus you do need to look up and say, no, this is the value proposition we want to have. And this is a discussion we're having within energy tech as well, is how do we, you want to communicate both, because you have the current customers, you're serving the current customers, but you want to show them the place you want to take them. Yeah. And it's very hard to navigate. Yeah. And so I fully appreciate the challenge. Yeah.
No, I mean, it is.
Yeah.
Yeah.
Interesting. Yeah. Do we want to talk about, sorry, I got distracted.
So maybe talk us through, your process today of where do you think you find the best companies? Because, investors tell us that, there's no lack of deal flow because your company's coming at you. Yeah. But where do you, in terms of quality, LinkedIn is full of, as soon as you put investor on there, I'm sure you're getting bombarded with a lot of pitch decks and stuff. How do you source through all of that? Are you currently using AI? I'm just curious, what investors are doing.
Yeah. I think what we do, first of all, is we build these thematically, what are we trying to achieve here, right? Okay. So I talked about these three broad categories in terms of infrastructure, supply chain, and workforce, right? But then within each of these, we have themes in terms of what are we trying to solve here? So let's take infrastructure, water. Water is a critical aspect. Okay. So within water now that's an easy statement to make. But I actually consider water is a critical aspect, no matter what scenario you follow into the future, whether it's fully fossil fuel or fully electrified, there is a water stress, right? Now, within that, then we look at how are people trying to solve water challenges? Are they using any advanced membrane, metal organic frameworks, any type of sorbent, or are they using any other type of, technology or process? And so we try to look at, when we're looking at deep tech solutions, we try to go in and see, first of all, fundamentally, does this deep tech solution, does this make sense? Will it scale? Where is it coming from? Who invented this? Okay, is the person talking about it qualified to talk about it? Okay, are we talking to the founder in this case, or the scientist who kind of invented this? And is that person paired with someone who knows how to scale this up? Okay. Industrialization becomes important, right? So in that case, when we're looking for companies, more often than not, we end up looking at something coming out of a good university or research lab, because you really need to look at the pedigree of the material. where it's coming from, whose lab is it coming from, and then the people who are combined there. So that's really critical. Similar, I think that theme kind of goes across most deep tech solutions, advanced material solutions, right? I mean, think about DexMat coming out of Rice University from Professor Matteo Pascali's lab. I mean, that's a great pace. I mean, immediately you start off from a place of confidence, right? We've seen similar solutions in another theme that we're addressing in built environment and infrastructure, which is extreme heat, okay? So in extreme heat today, everyone is addressing active cooling systems, HVACs. How can I make HVACs more efficient? There's 3 or 4 different types of passive cooling solutions, which are extremely energy efficient, which can create, which can essentially combine with active cooling solutions and significantly bring down energy requirement. Okay, I'll mention a couple of them. One is on my theme of coming from great places. There's a company named SkyCool in the Bay Area. Material was invented out of Stanford, and again, on the theme of when we were talking about teams, great founders combined with a professional CEO coming from a built environment background combined. And we believe they have a great approach to kind of how they're trying to solve this problem. Okay. And in this case, they have passive radiative cooling technology, which is rejecting the infrared portion of the heat. And therefore, it's creating a 10 to 15 degree cooling without actually spending a lot of energy. Second approach to solving problems like this, we find it's right here in Houston. There's a company named Helix Earth. And we've spoken to, Rawand and team are doing a great job there, where it's a technology that came out of NASA. Once again, you have to look at where is the technology coming from, a liquid desiccant solution, which, they're reducing the humidity of the air before it goes into the HVAC stage, and therefore improving the energy efficiency, right? So we really look at where the technology is coming from in those cases. There are other themes where, let's say, we've looked at companies that are working in the wildfire space, and there's a few companies that have people who have real experience in having worked in that space, either ex-firefighters who have come and combined with people who are, coming from the technology background and building a solution. Like there's a company, I'm mentioning a few companies that come to my mind, but there are many out there, right? So, but there's a company named Xyloplan, for example, which is, built by ex-firefighters plus technology and product people who are combining to start being able to map the high-risk pathways of fire propagation in urban environments. So then that allows you to do better emergency resource management as you kind of do that, okay? Similarly, we're seeing solutions in the space of insurance. There's a great company out of Austin named Adaptive, Mike Gula and team. They've built a great company, and they're building parametric solutions addressing power outages, okay, that last less than 24 hours. Today, there isn't coverage for small and medium-sized businesses, and they've built a parametric product for that. And they're building a few other solutions as well around that. They're building a parametric insurance platform. So, and in this case as well, it's a founder who is coming from the industry and building this up, right? So I think the track record of the founder is important when we're selecting these companies. In the case of deep tech, where it's coming from, whose lab is it coming from, and is it paired up with the right team? In the case of AI or compute also, it matters a lot where the people are coming from. That's the starting point, I would say, and then the team.
So if you meet a founder in the elevator, what advice would you give him or her to pitch to you the right way so that it gets your interest?
If I'm meeting the person for the first time in an elevator, I don't like elevator pitches. I hate elevator pitches. I will ask them to set up a meeting, at least a 30-minute meeting to talk through the first time. I hate elevator pitches.
But what would make you decide that you're going to take that meeting?
It's worth the meeting.
Worth the meeting. Because I'm sure people like you get approached all the time at conferences and events.
Yeah. I think specifically, first thing is fit with our thesis. Okay. We're very, very rigid. not to say rigid, but we're very focused on the thesis that we've picked. And does it fit into one of the themes? And within those themes, how does it fit with our research in those themes? So that's a pretty quick kind of assessment. Okay. And then, in that elevator pitch, I wouldn't expect to go deep into a diligence or something. But I would say at that point, really looking at fit with thesis and theme. And
When you think about, usually we talk about Houston as an energy transition capital, but I'm curious when you think about resilience, like what are ways that like Houston as an ecosystem could show some leadership, especially since you're here? I think the technologies that we're scaling up have similar challenges in their scale-up journey, especially the deep tech ones. Once again, as we see on decarbonization or oil and gas, in many cases, you're going to have to build processes and design and scale up, and you need that engineering capability, that manufacturing capability that exists here. Okay, this is kind of the center of that capability. So I think that's a really important one. But that's very similar to some of the other kind of VC pitches. I would say, I don't want to say fortunately, but unfortunately, we have all of the use cases here. Okay. Unfortunately, we have all of the use cases here where we need to apply resilience tech, whether it's extreme heat, flooding, early warning systems, water systems,
urban design, built environment, corrosion.
I don't think we have fire risk. I think we're good on that one.
Well, Texas has wildfire.
Yeah.
Okay.
Texas has had some pretty massive wildfire last year.
Really?
Right?
Okay.
Yes. So if you go beyond Houston, like look at the broader Texas environment, I think there's pretty much every single product or every single area we're focusing on, there's applications and use cases here. So I would think that within Houston ecosystem, there should be quite a lot of focus on becoming resilient. Today, people are using the word resilience a lot. Most of the times when people are talking about resilience, they're talking about in the context of power and grid.
Yep.
Power and grid because it's important for data centers. I think it's important to look beyond that into other constraints as well. And I think this is where, we're really happy to, I'm here in Houston, so really happy to talk to any corporate partner, anyone who is interested in the topic to learn more, to kind of explain where that can fit in. Yeah.
What's the best way to reach you for founders and for other partners?
Yeah, I mean, LinkedIn is probably the easiest way. And, I'm on LinkedIn, and then Tailwind Futures is on LinkedIn as well. And we're constantly publishing newsletters and reports and work that we're doing. We're doing a lot of work with people who are more closer to our ecosystem, like investors and prospective investors. We're doing executive briefings on each of these topics and pipeline briefings, but also we're doing broader events like at San Francisco Climate Week. We did an event around built environment resilience and really focusing on these two areas of insurance or insurability, as well as technologies that you can apply to improve built environment risk, right? Similarly, we'll be doing events throughout the year, New York Climate Week, and some of the other events as well. Stay tuned to our Tailwind Futures LinkedIn page and our website. And I'm on LinkedIn. Please reach out. And that's probably the easiest way. Yeah.
Well, thank you so much for coming here, and thank you for what you're doing in helping our societies become more resilient. So definitely,
thank you, Nada. Thank you.
Very important. Not only I'm sure you enjoy doing this, but it definitely has an impact on our society.
Absolutely. Yeah. Thank you. Thanks, Jason.
Thank you.